Greetings, traders, and welcome back. Today, we'll be doing a Forex Weekly Outlook video. And so I've gone through my watch list and I've selected a few pairs that I am going to be interested in trading or focusing on throughout the week. And so these pairs are high probability according to my standards in terms of how I do things. And so I'd like to share these insights with you guys like we've been doing for the past few weeks, right? But before we get into it, I would appreciate it if you guys would follow me on TradingView and YouTube. But TradingView to be more specific, because of the fact that I do release my ideas. Each and every trade that I take throughout the course of the week, I release an idea and I do use my TradingView as my journal. So as you go through any idea, you will be able to see what it is that I was looking at that time. I'll release the idea. Anytime I release an idea, it implies that I've entered the trade. So for instance, on the 22nd of July, I was looking at EURGBP. We spoke about this in a prior Forex Weekly Outlook video where we were talking about how we want to see the market draw into the weekly fair value gap. So I took a sell into the fair value gap. I spoke about how once we reach this fair value gap, we're going to look for a move towards the upside so as to target that high, right? And so all of this, I spoke about all of that in this video over here. And this is the entry. So everything such as entries, whether it hits my stop loss or my take profit, I have all of that journaled over here. Right. Another thing, just before we get into it, this is the previous weekly Outlook video that I did in last week's worth of trading. In this video, we spoke about USDJPY. Like I said, when you follow me on TradingView, you'll be able to see all of this information in real time. When I'm taking the trade, I took this trade live. It did hit SL. I took this one live as well. EURGBP, it hit take profit about a 4R. So that's that USDJPY. This is that EURGBP. So the reason we're here is because of this idea. I did release this because in the video we spoke about how we want to see the market draw into that weekly fair value gap over there. And so I will admit that there was something that I overlooked on the weekly time frame. So this idea was wrong. So I did take a sell on this pair, but it hit my stop loss. And then around Thursday, I looked at the weekly and I realized, my goodness, there was something that I overlooked. And we will get to talk about that and while we get into it, right? Took NZDCHF last week. We spoke about this. AUDJPY, we spoke about that. AUDJPY hit my stop loss. NZDCHF hit my profit. So looking at last week's worth of trading, 2 trades hit take profit, and I think about 3 trades hit L. So maximum good reward that was made if you look at the 4 plus 4 minus the 3, right? In any case, let's get into today's video. We're going to be starting with Euro USD weekly time frame. If you haven't seen any of my videos, I will explain how I go about looking for my drawn liquidity. So how we go about looking at drawn liquidity on draw on draw on liquidity or the draw of the market or the narrative, whatever you call it. How do you know if the market is going to be bullish? How do you know it's going to be bearish? What is the narrative? So I use external range and internal range liquidity. My external range and internal range liquidity exists at lows and highs, right? So once a high is taken out, that point over there is my liquidity pool. In this case, we see that buy stops were taken out, which is my external range liquidity. After external is taken, we want to see the market draw into internal, which is going to be our fair value gap. From internal, we want to see the market draw towards external, right? Which is that high. From external, we want to see the market draw towards internal. Fair value gap gets filled. From internal, we want to see the market draw towards external. And then once external is taken, we want to see the market draw towards internal, right? And so for the past few weeks, after the market had taken those buy stops, we were talking about how the market would draw into this fair value gap. I think 3-4 weeks ago, I spoke about how we still have the potential of drawing into this fair value gap, into this order block as well, right? So we see how we rejected this fair value gap, pushed a bit towards the upside, and then we see how last week's worth of trading pushed right through hit our order block, closed above it, which means this order block is still valid. But it hit this important zone here as well, which is our redelivered rebalance price zone, right? And so we can also see that in confluence to that area, price also tapped this bullish fair value gap. So a lot of confluence for bullishness on Euro USD. Now, let's go on to our smaller time frames because we already understand we hit internal range liquidity, so the draw is towards external. So let's look at our H4. Cool, so this is the H4 time frame. And now since on the higher time frame, we were looking at a bullish draw towards this area over here. Now we want to understand the H4 time frame. What are the lower time frames doing? So we can see how we hit that redelivered rebalance price zone. And then after hitting this area, what we want to see is a market structure shift towards the upside. And the market structure shift will give us an indication that the market is now switched from a sell side of the curve and it's now getting into a buy side of the curve, right? And the market structure shift also gives us an indication that this zone over here is holding as a strong support zone. Now, this high, right, rebalance the fair value gap. The moment it rebalances a fair value gap, this is regarded as an intermediate term high. It's a strong reference point. So from that high, we see how the market sweeps that low. Now, when price action breaks through this high, this is a break of structure. It's not a change of character, right? Change of character, we're looking at minor swing highs and lows. When it comes to breaks of structures, we're looking at intermediate term highs and lows. So this is an intermediate term high and low, I mean high, and we see our price breaks through that point with a lot of momentum towards the upside. That is now giving us the indication that the market is now bullish, right? Now, looking at this week, what we're going to be concentrating on is bullish arrays, right? That we want to look for confirmations on. These specific points of interest will give us confirmations on the lower time frame and we'll look to continue the market higher. So at the moment, what I'm looking at is that we've broken through this reclaimed order block. This is essentially a type of order block where we understand that at some point, the smart money or the institutions bought this area, which resulted in the market having to push towards the upside, that minor push towards the upside, and then we see the market push heavy towards the downside. Now that the market is trading above that point, those buy orders that they had initiated here is a clear reference point for them to come back here and reclaim the zone because they had previous orders at this specific zone, right? Previous interests were taking place over here. So now that we're trading above that point, what will happen is potentially what we could see this week is the market pulling back to this area, reclaiming this area, and then we'd like to see the institutions reinstate new buying orders towards the upside, right? And so that is potentially what might happen this week. There's also the potential that the market pulls back into this fair value gap. All we're looking for is any type of array that is suggesting bullishness. And off of that array, we go into smaller time frames within our kill zones. We look for buying opportunities towards the upside, right? So this is a pair to focus on this week. Let's move on. Cool. Now moving on to USD CAD. Again, we see how the market was pushing towards the downside. This is bearish institutional order flow. We see how when external range liquidity gets taken, right? Over here, external range liquidity got taken over there, right? It got taken over here, and we see how the market draws into internal range liquidity, fills the fair value gap. We see bearishness, external range gets taken. We'd like to see the market draw towards internal. Now, from internal, we'd like to see the market draw towards external. So, on a weekly time frame, we'd like to see bearishness, right? Let's go on to our smaller time frame. Now, all we would like to see is the 4H time frame aligning to what the weekly time frame is doing. So if we're looking at the 4H time frame, we can see that we were in the buy side of the curve. We hit that weekly fair value gap. What we want to see after that is a market structure shift towards the downside or break of structure. In this case, we can see that this low didn't rebalance any fair value gap. So this is just a minor low. So what has happened here is that the market has given us a change of character, right? Indicating that potentially the market is now no longer looking to continue bullish, but now we are in the sell side of the curve. And so that confirmation then allows us to look at bearish arrays that could, or points of interest that could possibly align us with looking for selling opportunities, right? So just looking at Friday's close off, we can see that the market, after giving us the chalk change of character, we see how we got this fair value gap. And then the market pulls back into that fair value gap and then starts to reject it. This is already acting as a strong resistance point. We see how it also pulled back into this reclaimed order block. So you have two types of resistance or points of interest over there suggesting bearishness. Now, coming into this week, there's still a likelihood that the market pulls back into the 4H fair value gap. Maybe it doesn't. All we're seeing is that all you need to focus on in this week is look for those POIs, those points of interest. So if the market does push lower, look for another potential fair value gap during the course of the week. If the market pulls back to that fair value gap, right, look for confirmations to push the market lower. That's all you need to do. You just wait. Once price gets into your POI, confirm entry. Let's move on. Cool. Moving on to Euro GBP. I spoke about this one earlier. Now, looking at last week's video that I did, if you did check out that video, for a very long time we were looking for price to continue higher. Eventually, it reached our external range liquidity because remember, over here we spoke about how external range got taken and the market pulled back to internal. And so from internal, we were anticipating the market to reach external. And so it eventually reached that point. And so, looking at last week's video, we spoke about how the market would then look to draw into this fair value gap. Now, what I mentioned earlier when I said there was something that I overlooked on the weekly time frame, it was this re-delivered rebalance price zone. It's a very simple but yet detailed array, right? So I overlooked it. I didn't see it only until later on in the week. So I did sell the market lower. We see how it hit that redelivered, rebalanced. I look for further selling so as to reach this fair value gap, but we can see how it reacted after that redelivered, rebalance array. And then we see how the market has rejected heavily after that. In the moment you have a redelivered, rebalance price range or zone or array, that implies that the fair value gap that exists lower than that point is going to be seen as a breakaway gap. The market will not pull back into that gap, right? So hits the array and then continues higher. So our draw at the moment is that previous week high where our liquidity pool exists. Let's look at the H4. Now on the H4 time frame, we see how that redelivered rebalance array gets hit. We get a market structure shift towards the upside. And so, looking at this week, there's still the potential or the likelihood that the market just continues higher and reaches our liquidity pool. Once that happens, that means we're no longer going to look for buying opportunities. But there's still a likelihood that the market does pull back potentially into a fair value gap, that type of a thing. And so, if our kill zone aligns and the market is in a point of interest, we can look to continue the market higher so as to reach that liquidity pool, right? Let's move on. Cool, EURGBP. We see our external range got taken for a very long time. We were waiting for the market to pull back into internal. And now that we are in internal range liquidity, we want to see the market then draw towards external range liquidity. Never mind this. This is supposed to be a 4H array. So the draw is towards the previous week's high over there where our liquidity pool exists. Cool. We hit our fair value gap. What do we want to see on the H4? We want to see a market structure shift towards the upside. This isn't a market structure shift. It rebalanced the fair value gap, which means this is a break of structure. This is an intermediate term high. So once price breaks that point, this signals that 4H is in fact bullish, which is even more confirmation, right? So we see how the market then pulls back heavily into a discount price. It pulled back below the 50% into this bullish order block. We can see that the wick as well is going to react as a rejection block. That's if price does pull back into a further discount. But we can see that this bullish order block is aligned to our 62 to 79% discount levels. These levels are very important because you tend to see a lot of reversals tend to occur at this specific price, right? And so coming into this week again, we're just looking for, a POI, point of interest within our kill zone to continue the market higher so as to target that liquidity pool, right? Let's move on. Moving on to GBPCHF, this is the weekly time frame. Again, external range liquidity got taken, the market pulls back to internal. From internal, we want to see the market draw towards external. Looking at last week, I was looking at the potential of the market pulling back into this redelivered rebalance price zone, but we can see how we didn't pull back into that, and we'll explain why on the H4. But the draw is towards the liquidity pool, right? Now, looking at the H4, we can see that this is the sell side of the curve, but Monday's price action pushes high and gives us a break of structure, which meant that the H4 was no longer bearish, but in fact it was bullish. So I was looking at the market potentially pulling back into that weekly array. But we can see that the market then gives us another break of structure towards the downside. It takes out this intermediate term low, which rebalanced that fair value gap. So this then aligned us with bearish momentum towards the downside. So it takes out that low and then pulls back into this fair value gap where potentially we could have looked for nice selling momentum towards the downside. I traded NZDCHF instead of GBPCHF, which was a nice sell-off towards the downside. So looking at this week, potentially there's the likelihood of the market pulling back into a fair value gap. And so off of that point, we then want to see the market continue lower. But, we want to just wait it out. Whatever the market gives us, we react on that. If it does pull back, look for confirmations. But if it doesn't, continues lower, it's still fine. There are a lot of pairs to look to trade this week. Now looking at USDCHF, again, external range got taken. The market draws towards internal range. We got this fair value gap. We completely filled it. We hit that weekly order block and then we rejected. We closed below the fair value gap over there, right? So we're still in this range. So external got taken. What is the draw? Internal got taken. The draw is then external range liquidity, right? We're looking for bearishness. Let's go on to the H4. Now, on the H4 time frame, again, what do we look for? We look for a market structure shift towards the downside, right? Once we get that market structure shift, so we can see this guy rebalance that fair value gap. This is an intermediate term low. So this is a break of structure towards the downside. We pull back into a fair value gap and a redelivered. Oh, this is not yet valid. Now that the market has broken this area, potentially we can pull back into that redelivered not redelivered, my bad man. Reclaimed order block, but tired, guys. It's a bit late. Pulls back into that reclaimed order block from that area. We can then look to push the market towards the downside, right? So that is what we're going to look for on USDCHF. There's nice, you know, we can potentially look for nice movements towards the downside coming into this week. Let's continue. Cool. Again, external range gets taken. This is NZDCHF. External gets taken. Market draws towards internal. From internal, the draw is towards external, right? We can see that for the past 2 weeks, we've been resisting this weekly fair value gap. So that is more confirmation that the market is looking to push lower, right? Let's look at the H4. On the H4, what do we wait for? This is that weekly fair value gap. Wait for that market structure shift. Market pulls back into a fair value gap. Confirmations towards the downside. So this pullback into that fair value gap, I took this trade and pushed it towards the downside. I showed it earlier. 4R was hit. Looking at this week, we may potentially pull back into this this 4-hour fair value gap. There are a lot of areas that we can look at. There's a breaker, push the market lower so as to target that, um, weekly liquidity pool. And so EURNZD, because of time, we won't continue on the H4, but you get the gist of it. External got taken, we pulled back into internal. From internal, the draw is towards external. Now, all of these concepts are very, very simple, and I'm taking you through these things each and every week, and you can see how simple it is. So when we get into the mentorship, all of this will be extremely, extremely easy. But with that being said, kind regards, the architect.